Hi, welcome back to Smart Truths. So in today's video, we're going to see some of the golden rules of accounting. So this is also another foundational video. In all the previous videos, we have seen the history of accounting and also what financial statements are and some of the accounting principles based on which they have been prepared. But then we need to understand the basic foundation of what debit credit is, what an account is, what a journal is. So this is very important in order to understand various concepts of finance. So we will go further and find out what golden rules of accounting are and also try to find out what a debit is, what a credit is, what an account is and what a journal is. So let's get started with the golden rules of accounting. So in all the future videos, I would like you to know that we are going to discuss two major questions. One, the what the concept is. What are we trying to learn from the concept? And then the most important question, why? Why should I know this concept? Why am I learning this concept? This is as important as understanding the concept. So in all the future videos that we're going to do in Smart Roots, we'll try to identify and understand the two basic questions, what and why. So now let's get started with the golden rules of accounting. I know you'll be surprised seeing this figure. So imagine this is our mother. Yes, so we follow the double entry system of bookkeeping even in our households. So I thought it would be much simpler if I understand with what we see in our day-to-day life. So our mother is going to prepare a budget for the family. So that's what typically happens in Indian households. So we prepare a budget based on what would be the estimate of expenses for the month and also how much we are going to save for the month. So assuming mother has to pay cash to newspaper vendor or to milk vendor. So she has a lot of amounts that she has to pay to these vendors. But are these vendors going to collect cash from your mother on a daily basis? Have you seen them collecting on a daily basis when they deliver newspaper? No. So they are going to collect only at the end of the month. Right. So the newspaper vendor is going to give newspaper to your mother and then he is going to go back. And then he's going to come back to your mother only at the end of the month. Okay, so the first concept that we are going to discuss here is the accrual concept. Yes, we've already discussed that in the accounting principles, but I'm just going to revise this point to understand it better. So the newspaper vendor has actually given newspaper, but he's going to collect cash only at the end of the month. So in fact, the newspaper vendor has earned the amount, but he has not actually received it. So this is the concept of accrual that I have explained in the accounting principle. Right, so he's going to come at the end of the month. So in the interim period of the month, the newspaper vendor is giving credit to the mother. So what is he acting as? A creditor, because he's actually giving a credit period of 1 month to pay the cash. Right. So in the books of the mother or in the diary that she is going to maintain the list of expenses or also the budget of the month, she is going to say $1,000 is owed to the newspaper vendor. So what is she doing? She is saying, I owe some amount of money to the newspaper vendor or the creditor. In other words, I am actually liable to pay to the vendor. So liable to pay means what? It's a liability for the mother to pay cash of $1,000 to the newspaper vendor. So the newspaper vendor is coming back to the mother at the end of the month. So when he comes back to the mother at the end of the month, your mom has to pay cash to the vendor. So she's paying cash of $1,000. So once she's paid the cash of $1,000 to the vendor, what happens to his account that your mother has maintained in her diary? So the amount that she is owed to the newspaper vendor, also the creditor, okay, becomes zero. Why does it become zero? Because she's actually paid cash and settled his account. In other words, I can say liability, right? So in this we can understand what an account is. So account is nothing but a ledger that you maintain for a specific individual. So in this case, a newspaper vendor. So he's a creditor and the mother had a liability towards him, and once that is settled off, his account becomes zero. So we can also imagine this tabular column in your mother's head, which is she's paid amount to vendor, so no longer she's liable, so that is less $1,000, and also cash goes out from your mother's account. So therefore $1,000 cash has also reduced. So I hope you've understood till now. So basically we've settled the vendor, right? So in other words, what is your mother done? She's actually balanced it. So she has reduced the liability of the vendor, and on the other hand, she's also reduced her asset. What is her asset? Cash. Cash is a asset to her. So therefore, she's actually done the art of balancing, which is the double entry system of bookkeeping. So that's it. So this is what the double entry system of bookkeeping is. In fact, we are actually doing it in our day-to-day lives. But then when we understand as a concept, it seems to be very complex. But when we relate it to the real life and our day-to-day life, it becomes much simpler concept to understand. So now you would have understood what a double entry system of bookkeeping is. Yes, so it shows two effects, right? So one is the vendor account, one is the cash account, right? So one is the vendor account and one is the cash account. So we've actually balanced the books by reducing the vendor account, which is our liability, and then we've also reduced the cash account, which is the asset. So at the end of the month, the liability is going to be equal to the asset. So this is what we are trying to say as the double entry bookkeeping system, or the art of balancing, right? So now we will get down to the first golden rule of accounting. So we will try to derive what the rule is trying to say. So newspaper vendor. Newspaper vendor is a person, right? So it's a personal account. So who is he? Creditor, because he's giving a credit period to the mother. And then what is the mother doing? She's reducing the liability. So liability has a credit balance. Why does it have a credit balance? Because mother is liable to pay to the vendor. So she has a credit that she needs to offset when she pays to the vendor. So which means that she has to debit it to close this account. So that is why she is debiting the account of the vendor when it is being paid. So this is nothing but the first golden rule of accounting, which deals with the personal accounts. So newspaper vendor is a person. So therefore, I am going to this rule of personal accounts. So as per the personal account rule, I have to debit the receiver and credit the giver. So when she pays to the vendor, there are two accounts involved. One is the vendor account, one is the cash account. So cash account is not a personal account, only the vendor account is the personal account. So what is she doing? She's actually giving cash to the vendor, which means the receiver is the vendor. So what should I do? His account should be debited. So that is what we are trying to do. So we are actually debiting the vendor's account. So this is the first golden rule of accounting that relates to the personal accounts. Let's move on. So we saw that the other account is the cash account. Cash account, of course, is not a personal account. So what is it? It's an impersonal account, right? So under impersonal account, we have another category called real accounts. So cash or any asset or liability, they all form under this category of real accounts. So it's an asset or a liability. So cash is an asset. So the asset is actually reducing in the books of the mother, which means she had an asset which usually is a debit balance, and the debit balance is reducing. So to reduce this balance, I am actually crediting cash so that I can depict that the cash has moved out of my books. So this is what the real account rule says. Debit what comes in and credit what goes out. So cash is an asset for me, and then it's actually moving out. It's going out from my books. So hence cash account should be credited. So this is the second golden rule of accounting. So in order to understand whether this account applies or this rule applies, we first need to split the transaction. What is the transaction? Payment to vendor. What account does it involve? Vendor account, cash account. What is a vendor account? It's a personal account. So I'll follow the rules of personal accounts. On the other hand, what is a cash account? Cash account is an asset, which means it's going to be an impersonal account, and then under that it's going to be falling under the category of real account. So therefore I will follow the rules of real account. So even if you forget what a rule that you should follow, you can always revisit this example in your head, and then based on that you can formulate any scenario, and you can also formulate the journal. You can also identify which account needs to be debited, which account needs to be credited. So simply which account needs to be debited and which account needs to be credited is actually what we call as a journal. So remember that a transaction, you always split into which two accounts are getting affected, and then you identify which category it goes into and what is the rule for that category. So this is a very 3 simple steps that you can follow to identify what the rule of accounting that I should follow to debit an account and also credit an account. So therefore, let me revisit. So the first rule that we have dealt with the personal account, one is debit the receiver and other is credit the giver. The second rule that we have visited is relating to an impersonal account, and under that we have dealt with real accounts, mostly the assets or liabilities, and then what debit what comes in and credit what goes out is the rule. So let's go to the next category. But before that, let me simulate another example to understand the third rule. So in the previous scenario, we saw that mother had to pay to the vendor account on a monthly basis. But she is not going to pay for all the expenses on a monthly basis, assuming she goes to a supermarket to purchase various groceries and vegetables and all that. Is she going to maintain an account with the supermarket, or is she going to pay immediately and come out of the shopping market? So naturally, she's not going to maintain an account with the supermarket. Rather, she's going to pay immediately and she's going to walk out of the store. So she pays cash and then she incurs an expense towards the supermarket and then comes out. So therefore the transaction is she goes for shopping and then she pays cash. That's the transaction. So we've identified, so the first step, as I told you before, we need to identify what are all the accounts that are impacted. So one account for sure I know it's cash because she's actually paying cash to the supermarket. What is the other account that is being affected here? So the other account that is being affected here is an expense account, right? So these are the two accounts. But I don't know what category expense account goes into. I know that it's not personal account, and also I know that it's not an asset to me or a liability to me, so it's not going to come under real accounts, right? So therefore this expense is actually going to come into an account called nominal account. So the rule for nominal account is debit expenses, credit income. Isn't that easy? So any expense that you incur is going to get debited. In case you generate an income, then you have to credit the income. So therefore, the impersonal accounts, another subcategory is nominal account. So the first subcategory was real account. The second subcategory is a nominal account. So which says debit all your expenses and credit all your income. So she is incurred an expense, so that's why she has debited an expense account, and cash on the other hand is going to be a real account and it's going out of my pocket. So therefore credit what goes out. So cash account is being credited. So that's it. We've actually formulated the journal. So expenses account debit to cash account is a journal that I need to follow. So these are the 3 golden rules of accounting. So in any accounting transaction that we have, we need to identify this, which account needs to be debited, which account needs to be credited. How will I identify? I will go back to the rules of accounting, find out what rules to follow, and then thereby debit the account and credit the other. So that is why the golden rules of accounting are so foundational, it's so basic, and it forms the building bricks of accounting, because only if these are followed we can actually prepare the financial statements and show how much asset I have, how much liability I have, how much profit I have made for the period and all that. So therefore the golden rules of accounting is extremely important to understand, and it's not complex at all. This is what we're doing in our day-to-day lives. So when we relate to day-to-day lives, everything becomes very easy. So let's revisit personal accounts. If you're dealing with personal account, you debit the receiver, credit the giver. If you're dealing with real accounts, you debit what comes in, credit what goes out. And in case if you're dealing with nominal account, debit expenses and credit income. Isn't that so simple? So let me tell you one more thing. In case you want to understand this even better, imagine scenarios and then try formulating journals by yourself. And in case if you have any issues, do leave it in the comment box and I'll come back to you on that. The next part of the video, the most important part, why? Why the golden rules of accounting? So any concept you read, whether it's in accounting or any other subject, try to understand why you're learning that concept. So why are we learning these golden rules of accounting? Because if these golden rules of accounting are not present, then every company will have its own rules of what needs to be debited, what needs to be credited. So if every company is going to follow, how will I interpret the result of the company? How will I know why this company is performing like this or whether it's actually performed well or not? So to answer all these questions, I need a common base to compare. I need a common language that company follows in order to interpret the results. It can be from a stakeholder point of view or it can be from a finance, if in case you're working in a finance department, you would like to interpret the results, then in any case, you would want to know why and how the results of the company are. So in that case, golden rules of accounting play a very important role. Yes, they provide a standardization. So they provide standards. So every field has a standard. Just like that, accounting also has a standard to follow. So everyone should follow the basic golden rules of accounting in order to make sure that everybody follows the same language. And it also brings uniformity in the way financial statements are prepared. So financial statements are prepared based on the journals that are created on a day-to-day basis. So therefore, what the journals prepared are based on the golden rules of accounting, make it easier for the financial statements to be prepared and also to be consistent and uniform across companies in different sectors. So hence, the golden rules of accounting, it needs to be understood and it also needs to be implemented in such a way that it provides a standardization across industry and it also provides uniformity. So that is why we are learning golden rules of accounting. So hope you understood what the golden rules of accounting are and why we are actually learning the golden rules of accounting. Don't worry even if you feel that it's a bit ambiguous. In all the future videos where I'm going to discuss various concepts of finance, I will keep touching upon this because this is important to understand every single concept. So there I'll keep discussing various scenarios and you'll get a complete hang of the golden rules of accounting. So in case if you have any doubts, don't forget to leave it in the comments box. Thank you so much.